The crypto crash continues as ETH merge delays, asset freezes at Celsius, and liquidations stoke fears in an already fragile market. Downside targets need to be revised lower as 20K Bitcoin and 1,000 ETH look too close for comfort. Vol and put skew explode and likely stay bid into the FOMC meeting as the Fed is priced to raise 75. All this and more in this week's Crypto Insight. Okay, crypto this week. So, well, our playbook is kind of working out. We've been saying for God knows how long, really, that we're anticipating a breakdown. And once we've sort of break 28K, it opens up the target to 20K, basically. We've kind of almost got there already, right? So that was a pretty swift move, breaking 28K, dropped to, we kind of just shy of 20K overnight. But basically the catalyst for the acceleration has been, a number of things, right? So we've had obviously a swift collapse in risk assets on the back of higher inflation last week and a more aggressive Fed being priced in. So that's, the correlation with equities, the kind of tightening of financial conditions, removal of liquidity, all those things impact crypto. And that's been ongoing for a while. So no major surprise there. Okay, but that was just a bit of a catalyst. The big one, though, that seems to have really accelerated the crypto move over the weekend is this lending platform, Celsius. Okay, and they're freezing assets and withdrawals to customers. So any money you had over there that was earning you any yield in crypto, well, it's stuck there for the foreseeable future. Okay, and these guys have got some liquidity problems. So they need to liquidate some holdings of their treasury to basically stay solvent by the looks of it, right? So that's the problem. And that's kind of led to this collapse. Now, there's also been talk about MicroStrategy, which always comes up every time this thing sells off now, right? So MicroStrategy, apparently they've been selling some Bitcoin, which is not really what they like to do. So I don't know if that's true or not. I just kind of saw that somewhere. Apparently they've let some go, but it's a very small percentage. I think, this guy, what's his name? Michael Cow, I think it is. He was on Blockworks recently talking to Jack Farley. Very smart guy, been around the market forever, ex-converts guy, looks at capital structure, analyzes it, understands it well. He's really delved into kind of what MicroStrategy have done in terms of these converts that they've issued and these bonds that they've issued to kind of raise money to then go and buy Bitcoin. From his angle, he's saying, look, they've raised this money. The first bond, it doesn't mature until 2025. So in theory, they're safe, right? Because they don't have to put up that capital until it matures, okay? But the problem is markets don't work like that. Markets don't wait till expiry on these things. They price stuff mark to market, right? So if MicroStrategy's earnings and cash flow generation cannot keep pace with the coupons on these bonds, then people start to question MicroStrategy and their solvency and things like that. Then you're going to get a stress scenario and they're probably going to have to liquidate more Bitcoin, right? So whilst they might not get margin called yet, there are things that can happen in broader markets that require them to liquidate some of this hoard of Bitcoin that they're holding and they want to hold forever, basically, right? So again, it's a problem of leverage, right? The guy seems to have over-levered himself. He's basically got way too excited, right? And he's put his company arguably in a vulnerable position when it could have just been in a nice position of strength, basically, right? He didn't have to lever the shit out of it. He seems to have done that. Let's see if the market tests him, right? So there's a few potential big whales that could be tested and could be forced to liquidate Bitcoin if it breaks 20K, right? So this Celsius guys apparently have topped up a margin account. If it breaks 18K, they're going to have to dump a load more, right? Similar, if MicroStrategy, I don't know, if it breaks 20K, does MicroStrategy need to dump a load more? Maybe, right? If they've already started selling. So you've got to be careful of this stuff. And what it means is we have no clue where the bottom is basically in Bitcoin right now. So for me, my 20K target, I mean, it needs to be revised down, right? There's no reason to believe that this sell-off is done, because the fact that we already got here with the S&P still sitting up at 3,800, with the S&P at 3,200, Bitcoin's not going to be higher, is it? Right? It doesn't make any sense really. So I think the stress is still ongoing. Now I'm starting to think mid-teens are very possible, and it wouldn't overly surprise me if we see 10K again, right? So I know it sounds pretty dire and dramatic, but you've got to see what's in front of you, and you've got to be realistic about these scenarios, right? And when it starts to happen in fast forward, you know, that you could get a situation where no one wants to touch crypto for a while, right? And we go into this kind of crypto winter type scenario that we had in 2019, where it's just like languishing for a while near the lows. And this doesn't feel like the lows, basically, right? It feels like the lows are going to be a bit lower than here, right? So that's kind of my playbook that I'm playing with. It's not like I'm massively short crypto or anything, right? I'm a bit hedged, not fully hedged, annoyingly. I'm a bit hedged. I'm preserving some of my money on the way down, and I'm looking for bargains, right? And you know, obviously Solana I see as something to accumulate in the 20s, and I'm going to do that. But that's kind of what I'm thinking right now. If we sort of then go over to Ethereum, talk about that a little bit. Obviously, that's just been brutalized, right? Once it took out, again, I said once it takes out 1,700, see you later, and it kind of, you know, that's what's happened. So these levels, the thing about crypto is, you know, these levels are quite well respected, right? If it breaks a level, it goes, right? It properly breaks, right? Now, they had this Ropsten testnet merge last week or week before. I think it was last week, actually, on the 8th or something, which went well, right? But then over the weekend, there was news that they delayed the difficulty bomb, which is basically something that they were going to release to make mining more difficult, to make people incentivized to move over to proof of stake rather than proof of work, all that stuff. They delayed that by 2 months. So that is your delay. You know, we were saying that a merge delay was very likely. Well, it looks like we've got one right now. Apparently it's only 2 months, but God knows, right? In 2 months, they might delay it again, right? So the market sentiment is not helped by that type of movement, right? Also, news of Celsius problems took us even further, because apparently they hold a lot of ETH, and 70% of it was in staked ETH, right? And staked ETH is not something you can sell that easily, because it doesn't trade 1-for-1 with regular ETH, right? So if the spread between staked ETH and normal ETH goes a lot lower, it means that someone's dumping that because they're being forced to liquidate because they need the liquidity. So we saw staked ETH versus ETH kind of move to sort of 0.94. And that's another sign of stress there, basically. So Checkmate from Glassnode was basically saying that if you look at the market cap of the 3 largest stable coins, that's reached 80% of the Ethereum market cap. So as Ethereum market cap's dropping and stablecoin doesn't really go anywhere, right? It's basically saying that the leverage ratio is getting worse, okay? So the idea is that there's a load of DeFi loans that have got Ethereum as collateral, okay? And when that ratio gets, you know, too close to 100%, there's a risk of loans getting liquidated and more ETH having to be dumped, basically, right? So because there's so much DeFi going on around in the Ethereum sort of ecosystem, Ethereum gets the brunt of the pain when things get sort of, you know, liquidated and stuff like that, right? So he's just pointing that out, that we may not be past the end game in Ethereum puking because of that, right? And then needing to be more sort of loans getting liquidated in DeFi. Okay. The last thing was just, you know, it's a bit of a bloodbath everywhere, right? So, you know, the alts were the worst hit last week, but if you look at, if I bring up this sort of chart here, you know, you can see that since sort of start of last week, the whole space is down anywhere between 30 and 40%, right? So you've got Bitcoin down 28, Sol down 28, ETH down 35, AVAX down 37. So it's literally a bloodbath everywhere, right? Alts, It's not just alts anymore, it's the whole space, okay? So you've got a correlation one type move to the downside across crypto, yeah? Now, I do think this type of liquidation presents a nice opportunity to slowly accumulate stuff that you like longer term, but you got to have a 3 to 5 year horizon on this stuff now, right? And the key is be patient. Don't just throw in money like in massive clips. Slowly accumulate the stuff that you like. I mean, let's say Solana here, you know, it's basically down to 2025. It touched 25, right? So I'm very happy to patiently just pick up little scraps of Solana as it's coming into this 20 handle. It might even get into the teens. That's what Genesis Vol guys are saying, that where they'll be buying it in the teens. But, you know, longer term on a 3 to 5 year view, if you think Solana survives and you know, the whole crypto space doesn't just disintegrate to zero, which it can do, let's be clear. So use money you can afford to lose, right? But if it doesn't disintegrate and disappear, Solana could easily do a 10x on you, basically, right? From those sort of levels. So that's your optionality. The thing is, you don't need to buy call options anymore in Solana when it's getting to these prices, right? Solana, you can think of a call option in its own right as a long-term play, right? So that's how I'm viewing it. I am doing it via selling puts, just because puts are on like 150 plus vol, so why not? But then but I actually want to get delivered on those puts, basically, right? So that's the way to kind of think about it right now, right? And at some point when I think the whole space is bottomed out, if I haven't accumulated enough yet, that's when I'll actually just go in and buy some straight out tokens without selling the puts against it, right? But right now I'm just using those expensive puts, just get into positions that I don't mind getting into, basically. I think that will be it for me. I'm going to hand over to Aaron to do a quick bit of Glassnode, and then I'll come back with the vol.
Well, getting into Glassnode's analysis, you can see their kind of theme for the week was the deepest, darkest bear market phase, which they feel like that's what we're in right now. Starting at the top left, we're again looking at this realized price, which we've talked about a few times. Again, it's the average price of all Bitcoins valued at the last time they were spent or moved on chain. And it's worth noting here that basically with this recent move down, that realized price ticked down to 23,340. Obviously, we've dipped below that right now, kind of a little bit over 22,000. And it's really just worth noting, looking here at this chart, that, you know, times spent with days below this realized price are pretty, it doesn't happen very often. You can see, you know, March 2020 and then 2018, 2019, really the only significant times where the market on aggregate is holding on to unrealized losses. Moving on from there, in the top right, we have the Bitcoin liveliness. And so what the liveliness is basically just showing is coin day destruction versus coin day creation. And so what does that mean? Basically, coin day creation is anytime a Bitcoin moves into a new wallet, it starts counting how many days that coin has been sitting there. And then coin day destruction is the amount of time, is the number of coins that have been moved, destroying those coin days accumulating. And so basically the liveliness is just trying to quantify the level of distribution versus accumulation. So basically when this is decreasing, when liveliness is coming down, you have a regime of hodling. When there's a lot of activity, the coins are being moved, that's obviously distribution. And so since kind of mid last year, rather July 21, when we had that great miner migration, we started to really go into a regime of hodling where the liveliness was really coming down. But as looking at this 3-month positioning, we've seen that we've slowly been kind of trailing off and coming into more of a distribution, just sort of reflecting a bit of uncertainty in the market as investors continually to feel like they need to de-risk and unload some of their spot positions. Moving on to the bottom left, we're looking here at the entity adjusted unspent realized price distribution. I know not a lot of words at all, but basically it's just a different look at that accumulation chart that we've looked at a few times, where it shows the different colors of the cohorts, who's buying, who's selling. You could see in the top right, there's the colors showing the cohorts. And basically what we're really looking at here is that this shows that in around 30K and around 40K, we have a lot of volume, a lot of activity where coins are moving between hands. But once we get below 30K, you get where we're at now, that 20K to 27K, there's not a lot of historical volume going on, kind of leaving the room for a lack of liquidity, which is going to leave us susceptible to some even more high volatility and little support, kind of putting some emphasis behind what Imran's sort of feeling that, you know, we're with where things are, this likely isn't the end of the puke, whereas we just don't have a lot of support down here. Lastly, moving on to the right, we're looking at the spent price. And basically the spent price is the average cost basis for coins spent each day. And they can split this up into long-term holders versus short-term holders. Again, long-term holders is over a year, short-term holders under a year. And basically the thing to take away from this is that it's very uncommon for the cost basis for long-term holders to surpass the cost basis for short-term holders. As you can imagine, long-term holders got in earlier, usually at lower prices. So when you have this prices coming down is really the only time when you see the cost basis for long-term holders surpassing short-term holders, which you could see this line is representing that 1-to-1 ratio. So every time it goes up and turns blue, that long-term holder cost basis is surpassing the short-term holders. We could see it's really not something that happens a lot. It's really kind of lined up with deep capitulation zones. And then in these previous times, these deep bear markets have led to sometimes as little as 52 days in 2020, as much as 514 days in 2014 and 2015. And these kind of deep capitulations where the long-term holder cost basis ticks up, it has been linked to deep drawdowns of -40 to -65%, all showing that, you know, we might not be through the woods just yet. And that is going to wrap it up for this week's on-chain.
Okay, so on the vol side of things in crypto, so no major surprise that realized has gone through the roof. So you can see realized for both Ethereum and Bitcoin here, Bitcoin on the left, Ethereum on the right. So we had a move from about 60 realized to about 100 on Bitcoin. And we've had a move from around sort of 70, 80 realized to 140, right, for a 7-day realized metric, basically. So a nice big spike in realized on the back of this sort of crash. But implied, you know, whilst they were very close to realized before this move, they are now a decent amount higher, right? And at the highs of yesterday, you know, they were miles higher, right? So you had short dated Bitcoin at 150 odd, and you had ETH at 200. And, you know, I had been flagging, right, that ETH is where the value was, right? Because that was, you know, realizing better. It had potential to move more. It had various catalysts around the place with the, you know, what was going on with the developer meetings and things like that. So that's definitely been the one, it's been the winner. And the fact that it got, the implieds got to almost 50 vols over in the front end over Bitcoin kind of just goes to prove that fact, right? So then, you know, obviously the realized is going to kind of hold up. It's probably not going to collapse before FOMC. But what do we know? We know that DOVs are coming on Friday. And last time vols was this elevated, instead of a 10, 20 vol reset, we saw a 50, 60 vol reset on that Thursday, Friday period, basically, right? So I wouldn't be smashing it out now ahead of the FOMC because God knows what could happen, right? If they hike 75, 100, whatever they decide to do. But I think the setup to sell weekly vol in crypto, particularly Ethereum, given that that's where the majority of the DOVs sit, may well be very attractive. Yeah. So definitely one we need to have on our radars. And Thursday afternoon is probably the time to start sniffing on that trade, right? Without taking too much risk. And maybe you do it via something a bit safer, via condor structures, so you don't blow yourself to smithereens in case something stupid happens. But, you know, those definitely trades that if the vol collapses 50 vols, you're going to make some money off them, right? So I'll be looking at that this week. Yeah. Then if we move over to sort of look at the term structures again, for people who've been looking at this stuff for a while, shouldn't be a surprise to see extreme backwardations. So we got that front end there, like say Bitcoin 150, 200 Ethereum, and that's moving all the way down to the back end, which is still around 80 in Bitcoin, around 100 in Ethereum. Okay. So when we get these type of backwardations, you know, trades I like entering into are typically call calendar structures. I haven't done any yet because I just don't really have any particular belief that we're going to bounce, right, in any meaningful way right now. It might actually be the way to do the weekly fade is to sell a bunch of the weeklies and then buy something a bit longer dated as your protection trade. That might actually be quite a smart way to do it. But, you know, like I said, I'll have a look at the surface and kind of make that decision later in the week. And I'll let you guys know on Discord groups and various things like that. Then if we look at skew, again, skew blowing out massively. It's kind of gone to extremes. So I've zoomed out a bit here, going back a year. We can see Bitcoin, nearly 40 vols for puts, back to where it was in summer of 21 when China was exiting. Ethereum, not quite as extreme as it has been, but pretty damn close. So we're talking about, 50 to 60 vol premium for puts on 25 delta. That's pretty crazy. But the liquidation risk is there, right? There's some extreme fear in the market, and the market doesn't really know where the bottom is right now. Yeah. So given what's going on, given what the Glassnode stuff is saying, given all these potential stops in the market where people are going to be forced to liquidate. If there's a bunch of forced sellers like a bit below where we are now, how can you call the bottom, right? Because it's going to be a function of how much liquidity there is on the bid. And right now, there doesn't seem like there is much, right? So I think you want to wait until you get a sense that whoever needs to puke has puked. I don't think we're there yet. Once we're there, we can let the dust settle and see what trades make sense. But fading the skew at these levels, even though it feels very tempting, I'm not doing it basically, right? And that's a different setup to where we were last time when skew did this, where I got the sense that, okay, the skew was a good indicator for a reversal. Right here, right now, given what's going on in equities, given what's going on in crypto, I just don't think we're there yet, right? So I would happily miss this opportunity in favor of the safety and the confirmation that the world isn't about to end, and then we'll come back and sort of address that. Yeah. All right. Anyway, those are my thoughts on crypto vol surface. If we look at what flows have been going on, firstly, if we start with Bitcoin, completely dominated by puts. Okay. So I've got this big green circle here. If we look at the major flows, the major clips, June puts, massive size relative to anything else. We see this ellipse down here. Basically, the open interest on the 25,000 puts in June has gone down by about 2,000 options. So that's been closed out because they've got in the money, and that's been rolled into other stuff, whether it's lower strikes in June, which are these gray bars, or it's some of these other longer dated clips like this in December, 15K strikes. There's some July 20K strikes. Those are sort of things that you'd be rolling your protection into when your June has exploded and made you a load of money, basically. So that seems to be the flow that's been going on. But really, it's the front end that's dominating the next week stuff, because that's the June expiry. That's where the gamma is. That's where you get max leverage. It's a cheaper protection, and it's really pure. It's that pure crash risk that people are chasing after when markets are tanking 10% plus in a day, right? So that, and then the only solitary little bit of call volume is this March 23 upside 50K strikes. That's just a little opportunistic call purchase longer term, but that's pretty small relative to everything else going on. Yeah. So that's kind of the main thing going on in Bitcoin flow. If we then look at Ethereum, slightly different picture. Obviously, you should expect to see a load of June downside puts trading, and we've seen that anywhere from the kind of 1650 down to even the 800 strike areas trading. And 24th of June is like the main expiry with a few scraps in July and September, but not massive size. But then if you look over to the call side, we've got some action up there, right? If you look at 67% calls in terms of volume, and that's because people are piling into call spreads. So because they're two-legged trades, the call spreads, it looks like double the volume in the way the volume is represented. Okay, but it's just the fact that when they're buying puts, they're just buying one leg because they want the protection and they want the unlimited protection. But on the upside, they're just buying call spreads to kind of not buy too much Vega, and that's the more efficient way to express the bullish view. So you're seeing June call spreads trading. These are these blue bars. You're seeing September call flies trading. So it's like a 3,500, 4,000, 4,500 call fly structure that was traded in a reasonable clip. And that's, again, people just trying to play that longer term bounce in Ethereum that they think is coming once the flow has kind of washed out whoever needs to be liquidated. And then assuming they get the merge done at some point, we get some bullish optimism coming back as this stuff starts to rebuild again and get back into less bearish mode. It'll be a while before it's probably bullish mode, but less bearish anyway, right? So anyway, those are the main crypto flows that I'm seeing. And that's my summary for the week. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.